A decrease in global iron ore prices and disruptions to Transnet rail and port services were the major contributor to the earnings and profit drop experienced by Anglo-American subsidiary Kumba Iron Ore in 2022. Kumba was forced to lower its production outlook for the next 3 years due to the poor performance by operator Transnet. For more, we are joined by Mpumi Zikalala, who is the CEO of Kumba Iron Ore. Mpumi, thank you so much for your time. With headline earnings per share coming in lower than expected, down 46%. For the benefit of our viewers, take us through the kind of operating environment that Kumba Iron Ore is reporting this set of numbers.
Thank you so much, Nastasia. So last year was certainly a difficult year. We saw quite a few macro events that essentially impacted our business. So whether you talk about the war in Ukraine, which disrupted supply chains, or you essentially talk about the zero COVID policy that was in China and had a significant impact on demand, or other aspects, you talk about the weather events where we saw heavy rains impacting our operations, or indeed what you mentioned, the logistics performance. I have to say that the operating environment was tough. However, even with that, I still think that we delivered a strong set of results. We delivered 37.7 million tons of saleable material. Yes, we could have done more, but it's still pretty strong. If I look at our profits before tax, we call that the EBITDA perspective, or the EBITDA margin that we had. We delivered an EBITDA of 37.3 billion rands. And frankly, that also assisted in terms of the value that we then delivered to our shareholders. So a total dividend of over 19 billion, so 19.2 billion, including a dividend of 4.7 billion that actually went to our empowerment partners. So it was still a strong set of results.
When you look at some of the focus efforts relating to Sishen and Kolomela's performance, what progress are you seeing so far?
I have to say I'm very proud of my team. So if I start off with Sishen, we certainly saw Sishen being more stable. And what was demonstrated when one looked at Sishen's performance in the first half of the year, where we clearly had rain impacting our business, and the second half of the year, where we saw certainly significantly strong performance from a Sishen perspective. And if I look at Sishen right now, we've got a fantastic rain readiness plan, so it will always rain, but that rain is not impacting the mine. We've seen improvements in terms of our HME availability, or the availability of the massive trucks and loaders that we use in the mining space. And we've certainly also seen just general stability and good buffers, which essentially means that Sishen is delivering well. From a Kolomela perspective, we had some challenges in the first half of the year. Kolomela experienced significantly more rain. And we also had a misfire incident at Kolomela during the first half, which reduced our production in the first half. But certainly Kolomela also came in significantly stronger in the second half. We saw up to a 39% improvement, for example, in terms of our mining performance. And when I look at how Kolomela closed the year, it had the best performance in December when it comes to our dense medium separation plant, for example. And it also had one of the best performances that we've seen from our direct sizing plant perspective. And so I'm confident that we are seeing progress in Kolomela. And going forward, we are well set up for the year ahead. The biggest challenge is around the fact that clearly our product buffers are still full, simply because we had some logistics challenges last year. But I'm sure that we'll continue working on that with Transnet.
Speaking of those logistics, issues that you had, you mentioned in your results presentation this morning that you're collaborating with Transnet to solve those logistical issues. How optimistic are you down the line that things may improve?
So I have to say, firstly, I'm excited by the partnership that was announced by the Minerals Council of South Africa, which essentially includes all the miners, as well as the board of Transnet. And clearly that includes the management of Transnet. That came through in December last year. And it was around collaborating around the recovery and stabilization of Transnet. I've started to see some positives coming out of that. An example, I know that the viewers might find this strange, but locusts in large numbers can actually derail rail. So it can actually, or they can cause rail to be tipped over and product to fall on the ground. And through the collaboration with Transnet and the Department of Agriculture, where we would typically have been talking about derailments at this time of the year, we are not talking about that because we've clearly seen an output of that. So there has been collaboration with Transnet. We saw it in 2020 as well with COVID, where we saw one of the best performances that we've ever seen from a Transnet perspective, because that's what collaboration essentially brings. The key around the space is that we are committed to continuing with collaborating with Transnet as Transnet works through the challenges from an overall channel perspective, and that covers both rail and the port. Transnet has got an action plan or a recovery action plan that's been shared with us, and we will actually help as much as we essentially can. It's not going to be easy. There's quite a bit that needs to be done, particularly for our channel, where we've got some maintenance that's outstanding, but we are committed to working with Transnet.
Mpumi, let's leave it there. Thank you so much for your time. That is Mpumi Zikalala, who is the CEO of Kumba Iron Ore.